Members, this is the appointed time, so I call to order this meeting, and we're here to look at the 4 subsidiary legislation related to Competition Ordinance Gazetted on the 18th of February 2015, and we shall proceed with the election of chairman. The procedures for the election of chairman are set out in Appendix 4 of the House Rules. So, members, any nominations for the post of chairman? A valid nomination should be made by a member orally, to be seconded by another member orally. And the member so nominated should agree to the nomination. So, any nomination? Dr. Lo Wai Kwok. I nominate Central Leung. Who seconds? Dr. An Cheng. Any other nominations? No? So, Sir Andrew Leung, would you please come up and chair this meeting? Thank you, colleagues. Do we need a vice chairman? Well, this is quite simple, so we don't need one, I think. So, shall we invite the administration in now? So first of all, I thank the administration for attending the meeting. We have Ms. Carol Yun, Deputy Secretary, and Mr. Sam Hui, Principal Assistant Secretary, and Ms. Ada Chan, and Mr. Jonathan Look. So perhaps I'll invite TPDS to say a few words. Thank you, Chairman. Now, I'm delighted to be invited to attend this meeting on the 4 pieces of subsidiary legislation to brief members on the 4 pieces of subsidiary legislation related to the competition ordinance. I walk members through the related notices one by one. The first has to do with the application of provisions. It sets out the framework for applying the key provisions to statutory bodies. In 2012, when the competition bill was still at the drafting stage, we briefed members that in relation to the 6 statutory bodies, namely Ocean Park Corporation, Federation of Hong Kong Industries, the General Committee of the Federation of Hong Kong Industries, Matilda and War Memorial Hospital, Kaduri Farm, and Botanic Garden Corporation, and the Helena May will be the subject of the application of the provisions. And in August 2014, we briefed the panel members on the proposal. As these 6 statutory bodies are engaged in economic activities which are not directly related to public policies, the key provisions of the competition ordinance should apply to these 6 statutory bodies. Members support this legislative proposal. The second regulation is competition disapplication of provisions regulation. Under the competition ordinance, there is a mechanism to give exemption to statutory bodies. Under the competition ordinance, the CITB Council made this regulation in accordance with the competition ordinance so that the recognized exchange companies, recognized clearinghouses, and recognized exchange controllers will be exempted from the competition ordinance. These non-statutory bodies are very important, and our mechanism is to ensure that the system is will continue to be effective, and the relevant legislative proposal was also reported to panel members on the 24th of November last year. The third regulation is the Competition Ordinance Commencement Notice 2015. In the Commencement Notice, the effective date of the empowering provisions mentioned in the two regulations are mentioned, and it relates to sections 3, 4, and 5 of the Competition Ordinance. The fourth regulation is Competition Turnover Regulation. It is established under section 163 of the Ordinance. It sets out the level of penalty. It has to do with technicality. It has nothing to do with the key provisions of the Competition Ordinance. In setting the penalty amount, we've drawn reference from the Competition Acts Overseas and Hong Kong Accounting Standards. For agreement or conduct with a lesser impact, the maximum amount would constitute 10% of the 10% of the turnover, but taxation will be deducted. Commission and sale-related taxation will be deducted, and the turnover of the company, the business situation of the undertakings, other grant, subsidy, or financial assistance will be taken into account in determining the turnover of undertakings. So much from me. I am happy to take questions from members. Any questions from members? Dr. Ann Chang. I'd like to have more details on the following matters. Now, about this application, or rather application of provisions, there are 6 statutory bodies, and the key provisions should apply because they engage in economic activities. And for the other regulation, well, pardon me, let me look at the papers first. There are also organizations such as the stock exchange to which the key provisions will not apply. But isn't it the case that the stock exchange actually engages in economic activities on a grander scale? Can you explain more to me? Thank you, member. Thank you, Dr. Ann Chang, for the question. Let me give you more details on the two regulations. For the first regulation on statutory bodies, according to the Competition Ordinance, bodies established in accordance with any legislation or subsidiary legislation may be regarded as a statutory body. Most of the statutory bodies are not engaged in economic activities. However, the Competition Ordinance seeks to regulate any entity engaging in economic or business activities. The majority of statutory bodies are not entities engaging in economic activities. They are therefore not a subject of the regulation or the ordinance. However, there is a small number of statutory bodies set up in accordance with the legislation, and at the same time they also engage in activities, economic ones, that are not related to public policies. So although they are set up as statutory bodies, they engage in economic or business activities, and that their main activities are not related to public policies, and we're of the view that they should be subject to the key provisions of the ordinance. As for the remaining 7 bodies, basically they are not statutory bodies. So according to the Competition Ordinance, because of their economic activities, these 7 non-statutory bodies should also be regulated. However, as mentioned just now, these 7 bodies are a key part of Hong Kong's financial market infrastructure, and also because they're already under the regulation of the SFO, to ensure certainty of the system, we propose that these 7 non-statutory bodies should be exempted from this ordinance. Any other questions, Mr. Martin Liao? Thank you, Chairman. According to the competition ordinance, the competition tribunal in the future can impose a penalty of 10% of the total turnover obtained in Hong Kong for each year for up to 3 years. And according to the competition turnover regulation, the pecuniary penalty will be based on the total turnover obtained in Hong Kong by the undertaking its daily activities. I think this will be hard for the SMEs to grasp. So, can the administration explain in a very succinct manner, for example, about services provided to overseas customers in Hong Kong? Will they be regarded as activities taking place within Hong Kong, and will such turnover be taken into account? And according to the letter from the Bureau, it said that sale conducted in Hong Kong will also be included. So I'd like to know the basis for making this interpretation, and please explain to the public the justifications. Thank you. Thank you. Chairman, thank you, Mr. Liao, for your question about the turnover. Now, it carries 2 implications. One is about exemption, the other is about pecuniary penalty. On pecuniary penalty, if we read Section 93 of the Competition Ordinance, it sets out very clearly that turnover refers to the total income obtained by the undertaking within Hong Kong. That's what the provision is about. Well, the purpose of enacting this regulation is to define what total income obtained by the undertaking in Hong Kong means. In enacting this regulation, we've drawn reference from the Hong Kong accounting standards and overseas competition laws, which several jurisdictions, UK, Singapore, so, having drawn reference from the Hong Kong accounting standards and the overseas competition laws, we see that by way of total turnover, we're talking about the total turnover obtained through ordinary activities. And according to the Hong Kong accounting standards and overseas competition laws, ordinary activities include provision of goods for sale and services. Also, in other jurisdictions as well as in our local competition ordinance, the total revenue generated from the ordinary activities would also include the sale of goods to overseas markets and also goods exported from Hong Kong. But then the sale should only take place in Hong Kong, and this is the experience of another jurisdiction, Singapore, which also has a similar provision. So we have drawn reference from the experience in Singapore. When the goods are sold to either the domestic or overseas market, such a sale that have taken place in the territory would be regarded as business activities in Hong Kong. But like I said just now, the ceiling should be set at 10% of the turnover obtained in Hong Kong.
So if there is a contravention, then the Competition Commission will also look into that basis. But we're just talking about the ceiling right now. Well, actually, Martin, the Secretariat has tabled CP bracket 1415-4. This is actually from a response from the government on the provisions. Yes, I just want to ask about Singapore. Well, if our ordinance is to look into anti-competitive conduct in Hong Kong, then I think that we should look at the turnover of the Hong Kong market as a basis, because, well, if we want to take reference from Singapore, yes, we could just look at, but we don't have to copy entirely everything from Singapore. We could make some adjustments. We could make adjustments based on our own legal perspective. Well, of course, we want there to be a deterrence. We're already talking about a pecuniary penalty of up to 3 years. I think we need to look into whether there is a need to adjust the penalties in the future. Would you consider making an amendment that we would take away the sales made outside of Hong Kong? Because I think we should target the turnover made in Hong Kong. Thank Secretary DS. Thank you. Well, we're actually talking about two different concepts. First of all, we need to look at the violation. We're talking about whether there is any contravention of the ordinance. We need to look at whether there are any violations. But when we look at the penalties, under the key provisions, it has already talked about the entire revenue within Hong Kong. So we will look at the revenue made by daily activities in Hong Kong. Well, how do we look at the total revenue? We would consider the competition ordinance in other countries. Most of them would take a percentage of the turnover, but in Hong Kong we're only using a certain percentage of turnover obtained in Hong Kong. So when we wrote out this regulation, we've already considered the concerns of the SMEs. Under our current regulation, we're using a very simple manner to say that we're only talking about the turnover obtained in Hong Kong by the undertaking. The final pecuniary penalty, of course, would be made by the Competition Commission. The Commission would give us guidelines on the specific penalties for each case. But in the regulation, we must list out a ceiling, and this is a percentage of the total revenue. So we have just said that we're just looking into the revenue obtained by daily activities of the undertaking. Thank you. I want to ask Mr. Kwok, I want to ask about the stock exchange of Hong Kong, because the SFC is already regulating the stock exchange, and so this would not apply to these non-statutory bodies. I want to ask whether you have considered other countries' methods. Do they also exempt these exchange companies? That's the first question. Second question, well, have you looked at the U.S. New York Exchange that is under the competition ordinance? So my concern is Silver versus New York Stock Exchange, case 373 U.S. bracket 13. This case talks about the situation we face. There was a Securities Exchange Act to regulate the New York Stock Exchange. The New York Stock Exchange used this to say that the anti-competition law could not be used or applied to the New York Stock Exchange. Well, right now we said that the Stock Exchange of Hong Kong is right now regulated by the SFC and therefore it does not need to be regulated by the competition ordinance. But for the case in the U.S., I think the case was brought to the Court of Appeal. It doesn't mean that if you're under one regulation, then you wouldn't be regulated under other ordinances. So what is your consideration here? Thank you, Chair, and thank you, Mr. Kwok, for your questions. We suggest exempting the 7 bodies in consideration of these bodies continuing being regulated by the SFC. And under the SFC, it also includes competition conduct. And so we believe that these 7 non-statutory bodies are already being regulated, and so they don't need to be applied to the competition ordinance. In other countries, we have also looked at the case mentioned by Mr. Kwok. We have also looked at other precedents. For example, in a court in U.S., if certain securities regulation already apply, then they don't need to be regulated by the competition ordinance, because to a certain degree there would already be a precedent that overrides the Securities Exchange Act. If we see that there are conflicts between the provisions, then the court would usually use the securities regulation to override other regulations. In the UK, the Competition and Markets Authority and the Financial Authority would both have a concurrent jurisdiction to deal with such matters. So, from overseas examples, we can see that in the UK and in the United States, there would be regulations and competition regulations that sometimes would see some inconsistencies. Therefore, it should be regulated by the court, or it should be said that certain provisions would override others. In Hong Kong, it is already set out clearly in the key provisions. Therefore, at the current stage, we hope to exempt these 7 bodies, since they are already regulated by the SFC, and under the SFC, rules are made also about competition. There would be more dialogue between the Competition Commission and the SFC in the future. Thank you. Mr. Liao. Thank you, Chair. My next question, I'm sure you have also received the questions made by the Chinese Chamber of Commerce, and see whether you would set out the guidelines. It is stated that the turnover would take out tax directly related to the turnover, and it seems to be a very simplified statement, because there are different types of economic activity, and you may talk about benefits. It could be benefits, other concessions, and any tax that is related to the turnover. Of course, we're talking about different types of tax. The turnover is a very important concept under the competition ordinance. We don't want to see any misunderstandings and our arguments on this. So would you consider clearly stating out what you define by turnover, and also on benefits, and also on tax, etc.? DS, please. Thank you, Mr. Liao, for your question. We have seen such suggestions from the Chamber of Commerce, and right now we have just stated out the key provisions, which is we're going to exempt benefits and taxes. There would be guidelines made by the Competition Commission in the future. Thank you. Mr. Tong, please. Thank you, Chair. Or extension of the ordinance to statutory bodies are welcome, because are there any violation of the competition ordinance? I think it should be decided after investigation by the Competition Commission, and not to be decided by the chief executive to exempt certain bodies. So I welcome including other statutory bodies in the competition ordinance. I think we have to deal very cautiously with the exemptions, because that might undermine the law. I want to use the stock exchange as an example. Markets such as the Hong Kong Stock Exchange should be regulated by the law, and if it is already regulated by the law, would it directly ensure that there would be no vicious competition, or to make sure that there would be regulations? So if we are to exempt stock exchanges from the competition ordinance, it is explainable. But for other bodies that are not engaged in key economic activity, and what they do might impact other markets, I want to know why these could be exempted. Let me give you an example. Let's take the Hong Kong Stock Exchange as an example. Yes, it is regulated to run the stock exchange. That market, of course, is regulated, but the stock exchange also has a online website that provides information, or that disseminates information. Would the information affect the operation or the competition on the website? Or let's say somebody wants to use this platform to disseminate information, would this kind of activity online affect the competitiveness? And how to ensure that these online platforms could also maintain their competitiveness?
Well, I must stress that I'm not suggesting that the stock exchange will be engaged in any competitive conduct. I am just talking from the market perspective. An undertaking may involve different economic markets, so I'm just talking about one area. That is the market which is not the main line of business of the stock exchange, and what can be done to ensure that other such markets will not be affected. Thank you, Chairman, and thank you, Mr. Ronnie Tong, for your question. Let me explain to you our concept, and then my colleague can supplement. Our concept is that only 7 non-statutory bodies will be covered in this disapplication because they are already regulated by the SFO. If these 7 non-statutory bodies have subsidiary companies, then these subsidiary companies will not be exempted. Only these bodies themselves will be exempted, not their subsidiary bodies or subsidiary companies. Maybe I'll defer to my colleague from the SFTB for more details. Yes, Ms. Chan. Thank you, Chairman. Now, in relation to recognized exchange companies, recognized clearinghouses, and recognized exchange controllers, our intention is not to exempt them from the application of the competition ordinance, because under the SFO, there is a clear objective, that is to maintain competitiveness of the securities and futures market. And there are specific provisions on the functions of the SFC, that is to take reasonable steps which it deems fit to ensure fairness, efficiency of the market, and also, unless it is absolutely necessary, there should not be any hindrance on the competition among subjects of this regulation. So there are key provisions in this regard. And all RECs, RCHs, and RHCs should operate in the light of public interest. And in fulfilling their duties, the interests of the public should be given top priorities where there are conflicts of interest. So it can be seen that the SFO also includes provisions on anti-competitive conduct. So that is to say, what I mentioned just now will not happen because the regulation is already covered in the SFO. If we're talking about the bodies mentioned just now, they are regulated by the SFC, and the SFC must take into consideration the competition element in accordance with the SFO. If you're talking about subsidiary companies of these bodies outside the scope of the disapplication of provisions, they will still be subject to the competition ordinance. Any other questions from members? Well, if not, I have a number of things to deal with. First of all, do we need to invite deputations to attend the hearing and give their views? No? All right. Secondly, I think the period has lapsed, and I need to move a resolution in the Council to extend the scrutiny period of these 4 subsidiary legislation. All right, this is done. Legal advisor, we should go through them one by one, right? So would the administration please help us go through them one by one? Sam? Thank you, Chairman. Well, since we're moving on to the clause-by-clause scrutiny stage, I'll go through them according to the order made by the DS just now. First, on competition application of provisions regulation. The first subsection, commencement. This regulation comes into operation on the day on which sections 5.1a of the Competition Ordinance come into operation. Members may note that there will be a public notice giving effect to section 5.1a of the Competition Ordinance. So reading both together, that means on the 17th of April 2015, this regulation will come into operation along with section 5.1a of the Competition Ordinance. Any questions from members? No? Section 2. Now, Clause 2, the provisions referred to in Section 3.1 of the Ordinance apply to the statutory bodies specified in the schedule. So this gives the ground for the application of the schedule. Any questions from members? The schedule sets out the statutory bodies specified for the purpose of Section 3.2a of the Ordinance, and we'd like to include these 6 statutory bodies in the application of provisions. We believe that the use of a schedule will provide a succinct and clear manner for users as well as readers of this legislation to understand. Matilda and War Memorial Hospital. This is the formal title of this statutory body. Is that right? All right, please continue. Yes. Yes, Paul. I need to declare interest. I'm a member of the Helena May. Well, I need to declare as well I'm a representative of the FHKI. Please continue, PS. Thank you, Chairman. The explanatory note sets out the object of this regulation. All right, next one. Next one, competition disapplication of provisions regulation. The layout of this subsidiary legislation is the same as the previous one, and as far as the commencement date is concerned, equally it's said that it will come into operation on which section 5.1b of the ordinance comes into operation. No questions? Please continue. Second clause, persons specified for the purpose of the ordinance. Any questions? No, please continue them. And in the schedule, same as the previous regulation, we set out the persons specified or the non-statutory bodies under this application of provisions regulation. Any questions? No, please continue. And then the explanatory notes. Chairman, should I talk about the commencement notice first or what? All right, Competition Ordinance Commencement Notice 2015. Now, DS already briefed members on the object, and the text is very clear. It says that sections 3, 4, 5 of the ordinance will come into operation on the 17th of April 2015. Very simple. Any questions from members? If not, please continue. Thank you, Chairman. Now, on to competition turnover regulation. Clause 1, Commencement. The regulation comes into operation on the 17th of April 2015. As for the empowering provisions in the competition ordinance, they have already taken effect. No questions, please continue. Clause 2. We set out determination of turnover of the undertaking. Subsection 1. It sets out the circumstances covered in Section 93 of the Ordinance, as per discussed by members. In terms of penalty to be imposed by the Competition Tribunal, the following activities are covered. And in doing so, we've drawn reference from the Hong Kong accounting standards and overseas competition laws, and we have included the relevant parts in the regulation. And as mentioned by DS, the turnover of an undertaking depends on the total gross revenues of the undertaking, which are amounts derived from the undertaking's ordinary activities in Hong Kong. And in calculating the undertaking's turnover, the sales rebates and taxes directly related to the revenues will be deducted. This is in accordance with the Hong Kong accounting standards. Well, we have a number of concerns on this turnover regulation. Would members please refer to CB bracket 4640/1415 bracket 01. We have a number of questions. First, I ask members to read paragraph 3 of the paper. We note that there is a relevant provision in the UK Competition Act, which is the Competition Act 1998, Determination of Turnover for Penalties Order 2000. And there are specific provisions on the determinations of turnover for specific bodies. That those provisions are sections 5 and 6, and there are specific provisions on the determination of turnover for credit institutions, financial institutions, and insurance undertaking. And we don't have similar provisions in Hong Kong. And perhaps the administration could explain their response to members. Now, a second point in the letter is that in relation to Section 2 of the turnover regulation, now the total gross revenues of the undertakings are amounts derived by the undertaking from the undertaking's ordinary activities. And just now another member already asked what constitutes an ordinary activity and what is the meaning of ordinary activities and what activities are not ordinary. So would the administration also explain the second point to members? PS. Thank you, Chairman. Thank you, Legal Advisor, for the questions. In making the competition turnover regulation, we've drawn reference from the other overseas authorities on competition laws, and we've drawn reference from the calculation of turnover in UK, but in the UK, the regulation is a bit different because there are specific provisions on specific bodies such as insurance companies. Because in the European Union, there are specific requirements or regulations on turnover or revenues of the insurance undertakings. That's why in the UK's local legislation, there is a need to align themselves with the EU law. As for whether we should, as for our legislation, the details are set out in the guidelines. For revenues derived not from the ordinary sale of goods or rendering of services, perhaps on commission, we believe that in the Hong Kong accounting standards there are already abundant examples illustrating this point. And we also consider the fact that the sector is familiar with the standards, and therefore we don't think it's necessary to include these specific situations in the legislation. So this is the response to point number 1.
The second question regarding ordinary activities. We understand that ordinary activities under the competition ordinance is often used by other jurisdictions, and we would also use this term as well, but there is no clear-cut definition under the accounting standards. We also include what is included under ordinary activities. Of course, it would include an undertaking, selling a product or providing a service or providing sales of services, or that an undertaking would indirectly provide services or goods through indirectly provide such services and to receive revenue. So these would be included under ordinary activities. What would be excluded? Well, let's say when a company was set up, there is a certain capital in the beginning. When the shareholders later on decides to expand and to put in more investment for other activities, then these activities would not be part of ordinary activities. Or when a company, other than sales of goods and services, also possess a property or foreign currency, and the value of these assets would appreciate or depreciate according to the market. And so this part would also be not considered as ordinary activities. We have drawn reference from the definitions in the accounting standards, and we are quite confident that if there are accountants to help companies with their accounting, then the revenue listed in the accounts would show the ordinary activities or the turnover under ordinary activities. So would the government provide us with a definition of ordinary activities under the accounting standards, or perhaps provide us with a written response to the two questions raised by the legal advisor just now? Could you also clarify, because in your response you said that you would also draw reference from the Hong Kong accounting standards. So what is the position of Hong Kong accounting standards? Are those standards just a guideline, or does it have any legal impact or legal implication? Can you also please clarify in your paper as well? Thank you. Well, I think we can provide you with the contents of the accounting standards after the meeting. We have already provided part of it, but we could also provide you with other standards as well. The accounting standards is not part of the law, but the Hong Kong accounting standards will draw reference from the international accounting standards, and they comply with these guidelines. These are kind of guidelines for the whole industry. Thank you. Mr. Tong. or the question raised by the legal advisor is what I wanted to ask as well. It seemed to Mr. Ho seems to say that investment stocks would not be considered as part of ordinary activities. If that is the definition, how about dividends or bonuses? How would you view that these might be indirect revenue from ordinary activities? Would that also be considered as part of revenue under ordinary activities? If not, I want to hear the reasons behind that as well. Second question. To section 1 to 2(1), I don't think that the definition of revenue, I don't think is problematic. But in section 2, it said that the total gross revenues of the undertaking are the amounts derived by the undertaking from the undertaking's ordinary activities. I think the problem lies here right now. I don't have the English version on hand, so I'm not sure how it is written in English. But I don't understand why the revenue, why you would say that they are the amounts derived by the undertaking, because it could be reward in kind, or it could actually be the trading of goods. Why would this kind of revenue not be included under the total revenue? Or you want to exempt these kind of revenues? Are you just talking about pecuniary amount or not? And then you also said further that if any undertaking receives any sum from a public body by way of grant, subsidy, or similar financial assistance, and you also talking about money. You use the word sum. You said that these would not be exempted. Well, if you receive reward in kind, that's not in the form of money. Would that also be considered as money? How do you clarify that? Well, thank you, Chair. I will try my best to answer the question. The first question regarding for certain bodies, the ordinary activities would not be the sales of goods and services. Instead, it would be you talk about the bonuses received by indirect sales of goods and services. That would be considered as ordinary activities, because the service provided is the bonuses derived from such ordinary activities. So conceptually, these bonuses would be included as ordinary activities, but of course it would depend on the specific case, on how you apply it in those circumstances. Well, I welcome the clarification from the government, but why don't you make it clear on paper? Could you perhaps try to clarify it also on paper? Thank you, Mr. Tong. Well, there's actually a definition in the Hong Kong accounting standards. If the undertaking income is not through the ordinary activities of sales of services and goods, and it comes in the form of bonuses and dividends, then it would still be considered as the amounts derived by ordinary activities. There are examples in the accounting standards that refer to it, but if we put it in the regulation, we feel that it would be too complicated, and we think that the Hong Kong accounting standards should be enough. Well, I think you can also look at the company ordinance, because under the company ordinance, your revenue might not exactly be in the forms of money. So I think you can also draw reference from the company ordinance. Yes, I understand, Chair, but it doesn't state clearly in the current regulation. You can put in words such as including the definitions made under the Hong Kong accounting standards, or including the definitions under the Hong Kong company ordinance. But right now, there is no such clear clarification on paper. So I think the government should also consider to put it more clearly, so that there would not be any conflicts, or that people wouldn't need to spend unnecessary legal fees to try to clarify the point. Thank you. Thank you for your suggestion. When we are putting out the regulation, we looked at other jurisdictions and also the Hong Kong accounting guidelines, because most companies would also use the main principles in the accounting standards. The Competition Commission would also set out their own guidelines in the future, and the Commission would list out more clearly what is defined by ordinary activities, and how you view money that are not directly related to the sales of goods and services. So we believe that it would give the industry a better clarification. In our own regulation, we just hope to define the principle of revenue. When the Competition Commission looks at it at a later stage, would of course, set out its own guidelines and to clarify all the definitions. Thank you. Chair, I also have 2 follow-up points. The government just now said that it has drawn reference from the UK. As Mr. Tong said, the definition of ordinary activity, to the general public or for SMEs, would not be very clear of the range of ordinary activities. The government has responded on paper, trying to clarify what is defined by ordinary activities. The Hong Kong accounting standards, as the government said just now, has no legal position. Well, if there are no clear provisions in the regulation of drawing reference from the accounting standards, then how would the general public understand what you mean by ordinary activities? In the UK, a related regulation also does not state clearly what is meant by ordinary activities, but there is a provision for reference, which means that when you are interpreting the regulation, then you have to interpret it. Let me try to read this out in English. The provisions of this schedule should be interpreted in accordance with the general accepted accounting principles and practices. So we see that in the UK, although there is no clear clarification of what is meant by ordinary definitions, there is also a provision that gives you the clear guidelines on how you define ordinary activities. So the government can also consider whether you would also put in such provisions so that the general public would have a better understanding of what you mean by ordinary activities.
Well, secondly, as mentioned by DS just now, the Competition Commission will be issuing some guidelines. In the end of last year, we note that altogether the Competition Commission issued six sets of guidelines for consultation, and they are about the first and second conduct rule, the merger rule, investigation procedure, exemptions, and these guidelines are also part of a requirement under the competition ordinance on what is meant by ordinary activities and the calculation of turnover. It seems that these are outside the scope of the Competition Commission's guidelines. So can the administration explain whether further guidelines will be provided by the Competition Commission on these matters? Yes, thank you, Chairman. Thank you, Legal Advisor, for a comment. We've been discussing with the Competition Commission on the calculation of turnover, etc. So we're going to proceed with that as to whether we can clarify and illustrate further what is, the points mentioned in the guidelines. We will go back and think about it. Yes, please bear in mind that the Hong Kong accounting standards do not have, it carries no binding effect. Mr. Paul Chair. Now I'd like to respond to one point. Nowadays, we don't like cross-references. For legal practitioners as well as for the public, I hope that there could be better clarity without the need to cross-reference other documents such as the guidelines, Hong Kong accounting standards, and other guidelines of the Competition Commission. And I agree to the suggestion just now because it is also the view of the Law Society of Hong Kong that the standards do not have binding effect. Now there are several industries, such as the insurance industry. In the UK Act, although reference has been drawn from overseas competition laws as well, the UK Act, as explained by the administration, have specific provisions for the specific industries to align the law with the EU law. Now, has any guidelines been issued by the UK authority in this regard? And on the other hand, if it is the EU regulation that seeks to improve the health of the market and to ensure competition, why can't we follow the EU practice and the UK Act to ensure competitiveness? Secondly, in HKA 8, the Hong Kong accounting standards, I'd like to know whether this is binding. We understand that this is not legally binding, but on taxation matters and other matters, I'd like to know if their interpretation has any legal status. Thirdly, in passing, I'd like to ask this. We give deductions of tax rebates and taxes directly related to the revenues. This is the interpretation and the concept entailed in the Hong Kong accounting standards, and yet you have put in the deductions in the regulation very clearly. So would you also consider including the definition of undertaking in the regulation as well? P.S. Thank you, Mr. Paul Chair, for a question about the UK experience. It is unique not because it has a unique UK Competition Act, but because of the relevant directives and regulations in the EU law that also applies to UK. Now, Mr. Porcher asked whether there are similar provisions in the Hong Kong accounting standards. We'll go back and look into that. Now, second issue has to do with the legal status of the Hong Kong accounting standards. And I said just now that the Hong Kong accounting standards is not legally binding. But would there be circumstances in which the Hong Kong accounting standards would have an extraordinary binding status, or we could have to go back and consider it? Now, Mr. Porcher also asked for greater clarity for the industries concerned. And you need to specify it very clearly, because the Hong Kong accounting standards is not part of the legislation, nor is the guideline issued by the Competition Commission. So you need to explain the linkage between the three sets of documents to reassure business undertakings. Now, are there clear case laws that clearly quotes the provisions from the Hong Kong AS? And I need to clarify that this is Hong Kong AS 18, not 8. Mr. Ronnie Tong. Well, Chairman, I don't think this is quite appropriate. This is not in line with the spirit of the law, because the Hong Kong accounting standards are revised every year. So will they in effect be given the power to amend the law? I don't think this is appropriate. The administration just now said that the Competition Commission will be issuing guidelines. I don't think this is appropriate either, because we're going to enact the legislation and guidelines will follow. If conflicts arise, there could be disputes on which carries the overriding status. And even after the regulation is enacted, I don't think any error can be rectified by the Competition Commission's guidelines. We need to go through a legislative amendment exercise. So I don't think it's very appropriate. At the next meeting, perhaps the administration should give us a paper and explain the situation to us. Now, just now, the PAS did not answer my question. I now have this English text. If you look at Section 2, Subsection 2, in English, the term uses amounts. So the general understanding of the word amounts is money. If you go to Subsection 3A, if an undertaking received any sum,
assistance in return for contractual obligation to supply goods or services to a third party, the sum is to be recognized as an amount. 咁因為有第三款 A 呢個英文嘅條款呢，就更加確認咗嗰個字 amount 嗰個字呢款。
So that means, by way of subsection 3, it confirms that sum actually is recognized as amount. I find this problematic. I hope the administration could explain more clearly the question I raised just now in relation to reward in kind. or transfer of benefit. Would these be covered or not? If not, why? I think they need to explain better. Well, Chairman, I also note in other places they use the term revenues, and it's okay because it also includes rewards in kind. Benefits is also another feasible term, but if you use the term amount or sum, then there could be problems because you are limiting the scope to monetary amounts. So please consider this comment. I think the members' comments are unanimous. So please go back, discuss with the draftman and see if this can be changed. The wording should not be confusing. So if there are no questions from members, PS, please continue with section 2. Thank you, Chairman. For subsection 2 of section 2, the provision is similar to subsection 1. This is about deduction. Given to the turnover of undertaking determined as a result of conduct or activities with a lesser impact under the Competition Ordinance. Now, this provision is similar to subsection 1. The only difference is that the turnover of an undertaking should include the amounts derived from the undertaking's ordinary activities in Hong Kong as well as outside Hong Kong. Any questions? No? Please continue. Thank you, Chairman. Subsection 3A. This refers to a particular circumstance that is under the Competition Ordinance's framework. Business undertakings are regulated, and an undertaking may not be registered under the company's ordinance. They may be set up by way of other legal means or non-legal means. Any such undertaking engaging in economic activities may also be regulated. So there is a circumstance in which the undertaking may be a public body receiving subsidy or grant or financial assistance, and therefore we need to consider how we deal with the subsidy or grant given in calculating the turnover. So for subsection 3A, if the undertaking received a sum from a public body by way of grant, subsidy, or similar financial assistance in return for a contractual obligation to supply goods or services to a third party, this sum is recognized as an amount derived from the undertaking's ordinary activities. Any questions? If not, please continue. 3B. This is another scenario. An undertaking may not be just a standalone company. Under some scenarios, the undertaking may involve subsidiary or parent companies, or maybe a chain of subsidiary companies. So, in considering the turnover of the undertaking, we may not just add all the undertakings in the separate accounts together, because part of the revenue of the undertaking may result from business transactions between the subsidiary companies. So 3B says that if an undertaking consists of two or more undertakings with that separate accounts, the total revenue is will not include the taking of revenues resulting from transactions between those undertakings.
Perhaps you can also explain this kind of also explain subsidies, because the government has launched different subsidies to stimulate economic activity. Some may be conducting research, some may be on enhancement of the entire industry to provide a sort of assistance. So these can all be considered as a third party providing certain kind of services. For these subsidies for the industry, if the companies receive such subsidies, would this also be considered as a revenue? Can you also try to explain this as well? Thank you. Thank you, Mr. Low, for your question. What we refer to here is the activity of the undertaking, or the ordinary activity of an undertaking. Let's say a private home for the elderly. This is a part of they provide such kind of market activity. If the government wants to provide subsidy to ensure more services for the elderly, and the government provides a subsidy for eligible homes for the elderly, then this would be a very classic example under this subsection. The home for the elderly receive the subsidy because it provides a service to the market. What is not included here is what is referred to by Mr. Low, such as enhancement subsidies given by the government, or subsidies to encourage the development of innovation. You would need to apply to receive such subsidies, but the subsidies may not especially be specifically for these for the activities, and so these would not be considered as ordinary activities. So what you mean is these are kind of innovation fund or a one-off special project would not be included. But if you need this money in the long run, then this would be included. Okay, this is clear now. Well, so the chair has summarized it. I just want to say that, we want to encourage innovation and technology. And so what the PAS said is that it is not part of ordinary activities. Any other questions? No, we can continue. Thank you, Chair. To Section 3 on turnover period. We need to look at the specification of turnover period. In 3.1, it refers to an undertaking that does not have a full financial year or in the preceding calendar year. So in 3.1, we clearly define that if there is such a case, then we would look at the turnover period as the preceding calendar year. Any questions? Please continue. 3.2. For an undertaking that does not have any economic activity in the past year, or it's shorter than 12 months, then the turnover period is the financial year of the undertaking that ends in the preceding calendar year, even though there have not been a full 12 months of economic activity. All right, 3.3. It defines in this section preceding calendar year. Any questions? Please continue. Section 4. Basically, it's the same as Section 3. Section 3 refers to turnover period for purpose of Section 5.4 of Schedule 1-2 Ordinance. For Section 4, it specifies the turnover period for purpose of Section 6.3 of Schedule 1-2 Ordinance. So 4.1.2.3 has exactly the same structure as Section 3. Mr. Tong? Yes, I understand. Using the concept of calendar year, but some companies clearing day may start on March 31st or on April 1st. Though the way of calculation will be different from the regulation, if there is a difference in the turnover period, then who would be responsible for calculating the turnover? Would the undertaking need to submit this balance sheet, or would the Competition Commission do it themselves? And would if the Competition Commission undertakes this work, then would they need the cooperation of the undertaking? The Competition Commission has the authority to seek information by the undertaking, but the Competition Commission does not have the authority to request the undertaking to use a specified format to submit the information. So when the Competition Commission finds that the turnover period differs, then the Commission can use its authority to request the information supporting the balance sheet and the accounts, but it can not request the company to prepare a balance sheet for the Competition Commission. Well, there might be discrepancies between the way the Commission and the undertaking look at the accounts. If the Commission wants to submit an application to the Commission Tribunal, then the Commission would need to calculate the penalty based on the accounts. So the Commission would still need to conduct their own accounts even though the company has already submitted its accounts, so as to justify the need to submit an application to the tribunal. How about other jurisdictions? The majority of the companies would have their own accounting year. Some prefer April 1st, some prefer end of March. If you can, well, most of them have their own accounting period, but if you want to use a calendar year, then it might be a bit difficult because some companies do not follow the calendar year for their accounts. So can you tell us how other jurisdictions do this? Do they also calculate it based on the calendar year? In the key provisions, it is stated that if the undertaking has looks at the financial year, then the turnover period will be the financial year. Usually, the financial year is the turnover period is the financial year of the undertaking that ends in the preceding calendar year. But if we're talking about a new company, then they might not have a clear financial year in the preceding year. So these sections only target those who do not have a clear financial year. Mr. Low, would you consider that if there is a special case that refers to violation during a certain period, but that may not be the turnover period of the preceding calendar year, or maybe the violation is during a certain period, and during that period you would need to penalize the company. But for most companies, you don't have to worry. But these sections seem to say that all companies need to provide such information. I think companies, regardless the size, would have their own financial year, and usually the accounts would be done in accordance with their own financial year. If you want to state clearly that you want it to be a calendar year, then you know the companies would be in trouble because many of them have their own financial period. Because I think companies would be very worried if they see this section under the ordinance. Or for new companies, and I think you might have to state out very clearly that these only refer to new companies or those who do not have a full financial year. Oh yes, if the companies already have their own financial year, then we would consider that financial year. We're just talking about special cases here. Let's say a new company set up that has not yet seen a full financial year, then we would look at the preceding calendar year. And of course, we would also see how long it has been in operation. It might have only been operating for 6 months or less than 6 months, and we would only consider that period. Thank you. Any other questions? So we have scrutinized the subsidiary legislation, and I hope that the government will come back as soon as possible with their responses and to see whether you can accept the suggestions by members on clarification of certain parts of the legislation.
3月28
We'll have another meeting on the 27th of March. So that's the end of the scrutiny, and we're waiting the administration's reply. Thank you.